Investment fees can cost you millions of dollars, and that's no exaggeration. I'm going to show you today specifically all about investment fees. I'm going to show you exactly what these are, where to find these, and how to reduce these fees to save you millions of dollars. This video is going to be one of the best videos I've put out, and it's also going to save you millions of dollars. I can almost guarantee it. And if you think that this is one of the most valuable videos, leave a like on the video and also go ahead and give me a follow. So I want to show you specifically, guys, why I talk about fees so much. I always say there are three main things that mean a ton in the investing game. Three wealth killers, let's say. One, lack of time. Two, investment fees, which we're talking about today. And three, taxes. We have a lot of videos on why you should start today with investing, why you shouldn't be scared to invest, and why it's extremely risky, in fact, not to invest. Although a lot of people think the opposite, as it's actually risky to invest. It should be the opposite thinking. It's actually risky not to invest. So once you get into the investment game, once you get over that hurdle, that mental hurdle to actually start investing, we need to start to understand the fees, because fees are killing Americans every single day. I'm going to walk through specifically a list of fees, where to find them and everything like that. So let's go to the first tab, and I'm going to actually show you specifically where these are. And also we need to understand fundamentally how investments are set up. So when you come to me and ask me what stock do I pick, I can't answer that question for numerous reasons, but mainly because I don't know your situation. But really, because there's multiple levels of investing, and when you understand these levels, you'll understand why I can't answer that question. So number one, let's go to column A. Let's fundamentally understand the levels of investing, because fees will appear at each one of these levels, and we have to understand the levels in order to understand the fees. So from an educational standpoint, let's start there. So the broker is the very first thing that we're going to talk about. This is where we house our money. Oftentimes you hear me talk about Vanguard because I use Vanguard. I also use Fidelity a little bit. You'll hear me talk about Schwab. You'll hear me talk about other platforms out there, such as M1 Finance or Robinhood and stuff like that. I don't use Robinhood. I think it's a horrendous investing app, and I'll tell you why in the top right-hand corner. But in general, those would be where you're housing your investments. And at this level, we'll cover, these are all the fees listed here. So you'll see at each level which fees are pertaining to each level. We'll get into the details of each in a second. So number two is the account. So within that broker, you have to select an account. And a lot of people don't fundamentally understand this difference. So often beginners investing have a 401k that's through work, and they think that they just have specifically a 401k and it's just kind of housed through their workplace, and they can't select their investments. They just put specific percentage when they sign up for work and they go on with their day. That's so fundamentally incorrect, and there's so many layers to that and discussion behind that. Specifically, we need to understand though which types of investment accounts we have. So if we do have a 401k, it is held at one of these brokers, not maybe one of these three here on the screen, but it's going to be held at a broker, not through your workplace. And yes, you can go into your investment account and select your investments. It's very important, in fact. Number two is you might have an IRA, something outside of work, or you might have a taxable brokerage, something outside of work as well. And each of these accounts have different tax benefits, or different tax, let's call it pros and cons essentially of each one, and different purposes. So understanding the different types of accounts for the different purposes that you're investing is important. And again, this isn't to get into an education lesson on this. This is just to set the stage for the topic today. The investment product is below that. So within the account, you have to select an investment product. Or you could even go as far as the core investment itself, a direct investment like a stock purchase directly. But most people in today's world, especially if you have a 401k, will have like mutual funds. It's a basket of stocks in a sense, right? ETFs, index funds, mutual funds, in a sense, it's a basket of stocks. Now, I do have a video explaining as well, top right-hand corner, what are the differences between these three and how do you actually decipher them and how do you understand them? So again, this lesson today is not on this, but this is just to set the stage. So we have all of those. And now at the fifth level, we also have professional services. Let's call them outside services, like a financial advisor or somebody like that. So if I fundamentally understand this, now I can get to the next conversation, which is the most important. What type of fees are out there and what should you be looking for? Because these are going to cost you a lot of money. So number one is the broker. So at the very top, there are brokerage service fees. These are fees to literally maintain your account. Maybe there's investment research involved. Different things like that are going to bring up the brokerage service fee. We will talk through each one of these first, and then I'll show you where to find them, and I'll actually give you a tutorial of how to basically look at these. At the account level, you have to be aware of the individual service fee. So this might be transaction you make for a 401k loan, maybe some advisory services. I often have people telling me that there's no fees in my account. And I go, yes, there are. You need to pay attention in a big way because you're probably getting absolutely annihilated and have no idea. I've had plenty of Budgetdog Academy students come to me and show me these live real time We saved their lives literally because it would cost them, it's a 6 to 7 figure fine. And that's not an exaggeration. And I'll show you specifically the numbers in a second. Beware, if you don't think you have these fees, I can guarantee you are wrong. And so individual service fee are things like that. Now in the investment product level, this is where most of them are going to appear. So this is at the ETF level, the index fund level, maybe the mutual fund level, things like that, right? We have something called the expense ratio. And I started this intentionally because the expense ratio is one of the largest expenses that you need to pay attention to. This is a fee that is the cost for the manager of the fund to run the actual fund itself. Extremely expensive. So if you understand what a ETF or mutual fund or index fund is, essentially there's somebody that has put together a fund, a basket of stocks and bonds or whatever asset class you're looking at, and essentially running that, whether it's passive, whether it's actively managed, there's somebody paying attention or, putting that together for an investor like ourselves. So that is the cost to basically run the fund in a short. It's pretty simple. This fee specifically is really, really important to pay attention to. Again, we'll show you in a second where to find that. Next one is the exchange fee. So fees to transfer funds within the same mutual fund group, not the MF that you're thinking, but the mutual fund group. And exchange fees can get really expensive really quickly. And a lot of these fees shouldn't be around. And the ethics are always in question. I always call it the industry for good reason. But just be aware of these guys. These are like huge, big. The next one in column E is purchase fee. Literally just as it sounds. Literally to purchase a fund. That's exactly what it sounds. Now, why would that be out there in the open? The industry is the devil, and the industry wants to take your money, and they're going to find ways to take your money in many different ways. So purchase fee is when you purchase the fund, and I highly recommend you to stay away from something like this. If it's making you have a purchase fee of any sort, don't do it. The next one is a transaction fee. I can't tell you how many times this one comes up. So literally fees to make a transaction. Pretty simple, right? But here's a common one, and this is what is so silly, and when people don't have context and why I can't give out specific funds on my page is because the general public will take that without full context and education, and they will go purchase that fund I given as an example. Let's say I'm using a Vanguard fund as an example, and they'll go purchase that index fund on Fidelity or Schwab. And what happens is there's a $75 transaction fee, one of the most commonly known issues in investing. Now, I warn people all the time, but then people get mad because they don't really follow my stuff and they just want, what's the answer? What's the answer? Well, this is exactly why. I had somebody that was following me for quite some time, but must have not followed me close enough to hear this. And this is exactly why I make these videos. So there was somebody that came to me and saw that I posted something about VTSAX, which we'll get into an example in a second. And they went to purchase on Fidelity, and they're like, hey, this was a year after the case. They're just following me, not a student, because my Budgetdog Academy students would know better. And if you are wanting to get into the Budgetdog Academy, go into the show notes below. You'll see an application process to get into that. It's the best financial program on the planet. It's not even close. And you'll see by the results we get. I don't need to speak about it. So this follower was following me for a year, and they started purchasing VTSAX because they just saw me randomly post about one time, and no advice, no, allocation guidance, nothing, just generally, hey, this is a fund out there, because people would always cry that I wouldn't post funds. So I posted it, and they did this for a year on Fidelity, and every time they bought this, they paid $75. Ladies and gentlemen, that is the dumbest thing you could possibly do, because that is every time you're purchasing a small sliver, let's say in dollar cost averaging, what we talk about every 2 weeks, you're spending $75 to purchase. I would never recommend that. But because you didn't listen and you decided to get the quick answer and you wanted that fund, this is what happens. And this is the repercussions of shortchanging yourself on the educational side, which is why my Budgetdog Academy students all become millionaires, and they all get on the fundamental wealth building path, and they actually know what they're doing because they actually do it the right way, and they don't shortchange themselves or shortcut themselves. They literally go through the guided 6-month process and lifetime access within the academy in order to actually secure the bag long term. And they're actually smart and they actually get results. But somebody that tries to get the free information, well, guess what? That's what happens to you. So is it really free at the end of the day? I don't think so. Stop being cheap. So the next thing is redemption fee. Redemption fee is when you redeem or sell mutual fund shares. Pretty self-explanatory, right? Not too hard when you go ahead and sell those shares. That shouldn't be the case, but it's out there. And again, these are things that are out there. I have no say in them. It's just part of the industry. I'm just going to bring awareness to them, and hopefully you catch them before you get screwed long term. And I can't wait to show you the numbers because it's about to blow your mind. Now, back end load fees and also front end load fees. If you have these fees, there's just like the devil in your portfolio. It's really, really sad. In fact, I did catch a few students early on with these fees, and they can be up to 5.75%. And that's a really, really concerning number. But oftentimes they are 5% plus, and I see it all the time, literally every single day. In my DMs, people DM me. And like I said earlier, guys, this is one little tiny, I'm going to show you how to save millions of dollars here, but this is a tiny little bubble within the whole entire personal finance world that I will save you millions of dollars. This is not an exaggeration. This is real life. But I had people come to me, hey man, I don't have money, but I am doing X, Y, and Z. I go, well, you do have the money because you're paying it in other ways. And you literally need to reverse course and spend the money for education in a smart way, or you are going to continue to spend way more money than the education you could have, and it's going to be millions of dollars. But you can be my friend and continue down that road if you want. It's all up to you. So these fees at the investment product level are so concerning on every single level. Now, some of these fees, like an expense ratio, they're going to be there. It's okay, but we need to have rules of thumb to stay within. These other fees, they should not be here at all. In fact, I want to basically get rid of all of these fees besides the expense ratio. And in some cases, the expense ratio is actually 0, but there will be some expense ratio. That's a cost to manage a fund. That's okay. What I typically like to stay within, and this is all in fees. So as I'm talking about all these fees, everything together combined, I want to stay at 0.20%. You might see it on the screen, or it's essentially 20 basis points. 1/100th of a point is a basis point. So if you hear somebody say basis points, 20 basis points is 0.20%. I want all of these fees together to be less than that. Ideally, as close to 0 as possible without shortchanging yourself at the end of the day. The core investment, I have nothing here intentionally because it doesn't necessarily cost money to buy an Apple stock. However, there are things like payment for order flow, and there might be a transaction fee depending on the broker that you're with or the platform you're purchasing on. So you want to be aware of this at this level, but mostly in order to purchase, oftentimes there is no fee. So just be aware that payment for order flow could really get you. And I have that in the Robinhood video that I shared in the beginning of this presentation. The other levels of fees are outside of your actual investments, but it's somebody you're paying somebody, right? You might pay a third party, like a financial advisor, called AUM, asset under management. Typically, this is about 1%. Now, this can vary, but this is typically 1%. And I always say that what people think about the financial advisors and what they actually get are usually not aligned. Most people think that they're not paying anything for this. They're like, oh, well, I just pay 1% and that's all I pay. 1% doesn't sound like a lot, but I'm about to show you the reality of what 1% costs you. And 1% doesn't come out of your pocket, but it comes out of your investment portfolio. So a lot of cheap people that don't want to invest in themselves will say, well, I'm going to forego the education because I don't want to spend the money. Too scared to do that. So I'm going to go to this financial advisor, this smart guy, right? That can't beat the market, but he says he can beat the market. And I'm going to go to this advisor and I'm going to pay them 1% because I don't have to have cash out of pocket, but I'm going to end up paying way more as a result. Those individuals I cannot help. Now, I'm not saying every financial advisor is a bad person or they don't have good intentions or they don't provide an excellent service. By no means do I say that. However, you have to be aware of what you're paying. The next one is a robo-advisor fee. I hear a lot of people say they use Betterment or Vanguard Digital Advisor or one of those robo-advisors out there. There's a lot of them. Be very careful when you're using that. Typically, and it depends, but usually it's anywhere from 25 to 50 basis points. So 0.25 to 50 basis points just alone with the robo-advisor fee. That's not including the funds that they pick, like the investment product they pick, or all of these other fees on top of that. It's just at the robo-advisor fee, which is literally above my rule of thumb, which is 20 basis points. Okay, that's a breakdown of actual fees that you should be aware of. Now, you know the levels, you know broker, account, investment product, core investment, you know other. You understand what those fundamentally are, and you also know the level of fees there are. Now, the next piece of the puzzle is where to find them. And so I'm going to walk you through this. So let's condense this down a little bit so you guys can see the full screen side by side. So I'm just going to hide this column. Now, at the broker level, we can go to the website pretty much directly, and we can see these fees. They're very publicly, out there. Now, you have to remember, a lot of these different brokers or platforms do not want you necessarily to know, and they're going to make it very hard. It's going to be in those little tiny gray on page 47 of a 150-page document. It's going to be really little, and they're not going to want to show you exactly the truth. That's very normal of the industry, which is why I expose the industry every single day, because I actually have ethics and a heart. So website direct is the best place to go for this. That's at the broker level. Now, at the account level, you go to either website direct for most of these accounts, but if you have a 401k specifically, you need to open your plan disclosure. If you don't know where that's at, ask your HR team, but typically it's on your 401k portal. and you'll be able to easily access that. So pretty simple. Ask for the plan disclosure. Now at the investment product level, you need to go find the fund fact sheet or prospectus. And then at the, let's call it the other level, we need to just check the contract. You signed up with a third party, check the contract, or just ask. And they might give you the runaround. They might not want to tell you the truth. And this is why, even if you use an outside professional, you need to be self-educated, which they will not do for you, no matter what they say. You will not be educated to the level that I educate you within Budgetdog Academy. There's no chance, because if you were that educated, you wouldn't be using a third party. So my best testimonial ever in my academy, it happens all the time, but recently, literally like 2 weeks ago, one of my students graduated and she literally told me, I don't need you anymore. And I said, thank you. That's exactly what I want to get you guys to. And all of you guys should be able to be at that point. You shouldn't need me. You shouldn't need outside professionals. You should get the education and go on with your life and control it yourself. And that's what I preach, because you're going to save millions of dollars, like I said. So we're going to walk through each one of these specifically, is where to go find these, okay? So number one is the website directs. I'm going to pull up the broker level. And of course, every broker is going to have a different type of process to find these. I'm just going to use random examples, okay? So I'm going to use Vanguard's example. So how do I get to this actual piece right here? If I go search any of these funds, and I go search, let's call it VT-SAX. I Google one of my funds, and we'll get to this in a second as to why I get this, where I got to this. But let's say I Google this and I pull this up and I click on fees, and we'll walk through this process in a second, a little more detail. You'll see at the bottom where it talks about fees, see Vanguard annual account service fees, which we just talked about, right? So that's where I got to this. I click on that link and it takes me here. Now this is going to show me, if I go back to my Excel sheet, this is going to show me my broker level fees. This also will show me, like I said, my account level fees, website direct for both of these, for everything besides typically like a 401k. So if I go here and I go see these, I can see specifically all of the types of accounts right here, account types. It's going to literally walk down and show you every type of account. It even shows the 401k in this example here. And then it's going to show you the fees specifically for this. It's going to say $25 for each account, Vanguard brokerage services fees. Won't assess the fee if a client's totaling in total qualifying Vanguard assets are at least $5 million. And you can see the services and commission fee schedule if you would like even further, by specific product, everything. It's very detailed and laid out. This is another reason I like Vanguard. They're very transparent. They're open. They did increase their fees recently, just as a heads up, which is what this is talking about right here. As long as you're aware of these and they're very open, they're a very trustworthy company. Now, they are moving away. I'll be honest, side tangent is I do think they're moving away from Jack Bogle's initial principles. We'll see what happens in the future, but I have no allegiance to anybody as far as a specific company, a specific broker. I do use Vanguard. I do use Fidelity. They are respected, but I'm not opposed to ever making a change, because the thing is, the difference between me and your financial advisor, I'm not locked into having ties to anybody. I don't get paid to promote Vanguard. I don't get paid to promote a specific type of account. I get paid to educate you on everything and show you everything and figure out what's the best path to make your situation work the best for you. I don't have ties like that, which is a huge benefit that you'll see in a second. So I can go through all these fees and literally see exactly, very clearly what they are. And you might not think these are a lot, but trust me, they add up. And then on top of that, what's cool about this is you can actually avoid the fee, and it literally shows you how to avoid it. Now, of course, they're going to charge you in the front end, but at least they're going to show you how to avoid that. And specifically like this, pretty simple. Like I've done this before. Sign up for e-delivery. Kind of takes it away. It's awesome. And so you can see sometimes it's a specific, dollar amount and things like that you need, all sorts of different reasons, but you can straight up see what they're doing and how to avoid this fee, which is awesome. This is why I like Vanguard so much at this moment. So they're just very transparent. And this is the same for Fidelity, Schwab, and of course, all of their different fees are going to be different. So that is website direct for these first two, where I'm essentially finding if they have these types of fees, and I can see directly what they are, which accounts, how to avoid them, all that kind of stuff. And so these are the first two. Now, this next one, investment product, is an ETF index fund mutual fund. And so like I was showing you a second ago, to get to this one, I actually just went kind of a back end way through the investment product. But let's go search like an ETF or index fund and mutual fund. So let's use VTSAX for this to find these types of fees and show you on the funds fact sheet and prospectus where these are. Now, what is the fund fact sheet and prospectus, to give you some context? Fund fact sheet is let's call it the summarized version or the Spark Notes version of the prospectus. The prospectus is that long textbook. The Spark Notes is essentially the fund fact sheet. It's going to give you the bullet points, right? That you're an investor of any kind for these investment products. On an annual basis, they are required legally to send this to you. So you'll get this in the mail or e-delivery or whatever the case is. However, don't wait to figure out your fees. Just go to search the product. So let's use VTSAX as an example here. So I'm going to go to Google this. I went to VT Sachs. You can see right here, I clicked the first link right here, very direct. And this is going to show me everything I need to know very directly. It's very easy to see. The very first big thing I see is expense ratio. So I know that's 0.04% or 4 basis points. Now, is that good? Is that bad? Obviously, like I said, I want to stay within 20 basis points and together. Now, this is an index fund, which doesn't make sense that it's a pretty cheap type of price. I want to go down here and kind of see, obviously you want to, from an investment perspective, like, making an investment decision, there's more to do here, but for this conversation, we're going to performance and fees, right? So I'm going to go down here and I'm going to see exactly all of the fees that are associated with this. So we see the expense ratio, 0.04%. The average expense ratio of similar funds are 78 basis points. That would be a no-no. I would not want average. I love this. I love 0.04%. Can you get lower? Yes. Fund-specific fees. Remember our purchase fee we talked about. Remember our redemption fee. 12B1 fee is one of those fees as well. It's wrapped up into our expense, but there is none right here. And that's why I love these so much. You can see down here specifically the 25% annual account service fee. They're very transparent, but the gray letters do appear, and you can obviously click this to then go to this side of the equation. But this is very direct and rate how you search this, guys. Now I'm going to walk through a few other ones. So let's say we don't use Vanguard. Let's just say we use ARK. You succumb to the pressure I told you not to, and you've bought a thematic ETF and you failed miserably because you don't follow me. So you get to ARK, and Kathy Wood's running this fund. We go back to understanding the Excel. She is the manager to run this fund. And she is active. So she's buying, selling, trading, all this kind of stuff, right? So her expense ratio is going to be a little more than a passively managed index fund. That's just, nobody really runs it. It's like set up and just kind of like passively does its thing. Follows the total stock market like this one is right here, total stock market. But this one, there's somebody that's running this. And as you can see right here, here's the fact sheet. Here's the summary prospectus if you want to go into more detail. But the expense ratio is laid out very clearly right in front of us. If I click the fact sheet, I can obviously see the expense ratio right here. I can look through every little thing. Oftentimes what I do is Control F fees to see if anything pops up. In this situation, they do not, but you can always do Control F in the summary prospectus or whatever. And as you can see, this is a much longer, wordier type of version. And I see Control F fees. It literally gives me all of the feed information down here. And oftentimes what people don't talk about are other things that we need to discuss today, like portfolio turnover. So we don't talk about this often. And why I talk about index funds and ETFs is because it doesn't really experience as much. There's a lot of conversation behind this before, opening a can of worms here. Portfolio turnover, the fund pays transaction costs such as commissions when it purchases and sells securities. And like I said, Kathy Wood is active. She's buying and selling securities. Those transaction costs will be listed here. Now, the cool thing, portfolio turnover is 26%, which is pretty high. And you can go see the portfolio turnover in like pretty much anything, any fund, you can go search that, right? The difference between mutual funds and index funds are one, that there's less turnover in an index fund because there's less buying and selling because it's a passively managed vehicle, right? Whereas a mutual fund, there's more actively managed mutual fund, that is, there's more buying and selling. And those are pushed to the shareholders. We need to be aware of that. That's a hidden cost that no one talks about. No one's going to tell you. It's not really going to be out there in the open as much. It might just say portfolio turnover. Unless you understand that impacts you as an investor, you might not know. So net of fees and taxes, that's another hidden fee in this whole game. Most people don't know that. And so all my traders out there, all my people that think they know what they're doing and they're actively managed, putting all their money in all these different funds, they don't understand all this stuff behind the scenes. And it's really scary, in fact. But anyways, that's the fun fact sheet. Here's an example of iShares by BlackRock, and you can see the government fund treasury for here, and you can see fact sheet prospectus. You can easily see there. You can see all the fees right here. You can see the expense ratio is 5 basis points. So again, it's pretty simple to find this stuff. You can always do Control F, but mainly it's the fund fact sheet and prospectus. You can obviously open these separately and go search, very similar to the ETF we just looked at, and you can read on this stuff. But again, guys, this goes back to why it's so profitable not to go chase all this other stuff and just be the index or just be the ETF and keep a simple 1 to 5, fund type of portfolio we talk about all the time. So if I go back here, we've talked about the types of fees. We talked about where to find the levels that these are at. Also, where to go find these. Very direct, guys. Just go do the work, okay? If you want to keep it super simple, just follow my approach and you'll probably avoid all of these anyway, which is why I talk about this so heavily, because I actually have data and realistic statistics. And if you look at the average investor over the last 20 years, you see that the average investor returned 3.6%. The average investor returned 9.7%. The average market. So average market versus the average investor. Now, why is that? It's because they do dumb crap like this. The average investor decides to go buy, sell, trade, change their strategy every single time the market turns. They do all sorts of silly things that hurt them. And I show them all the time, you can't catch up. There's a lot of statistics as to why once you make bad mistakes, you can't catch up, which is why you should follow the approach we take, and why the average market, even if you're the average market, you'll do really, really well. And in fact, if you even add some sauce that I provide within my academy, you'll be above the average market pretty simply with minimal risk. We do a lot of due diligence on the type of portfolios we build in order to eliminate the risk, but also have the upside as well, which is a huge piece of the conversation. Lots of the upside comes with a lot of downside typically, but if you position correctly and you understand what you're doing, you can really build a great portfolio for you and your family for years to come. So that's the average market versus the average investor. I'll show you the difference real fast before we get into the cost of the fees. This is the cost of not knowing what you're doing. And you can be my guest and not pay money to learn this stuff, but I always say invest in yourself for good reason, because you'll spend money one way or the other. It's up to you. So let's say your initial investment is $0 and your $2,500 a month contribution and your length of time is 30 years. And we'll use the same example for the fees in a second. And let's say your returns, historical market returns, or let's say average investor. So your average investor got a 3.6% return. Your average investor over that period generated $1.5 million. You might think that's a lot, but let's look at the difference. Opposed to the average market, if you were literally just the index, like nothing crazy, nothing that we talk about, just simply the index, your difference would be 4.6. That is over $3 million mistake. So you be my guest. If you want to guess with this game, go ahead. I don't care. I can only help who wants to get help. But this is going to cost you $3 million, like straight on the screen. That's a factual last 20 years average investor versus just the average market got. And that's due to a lot of different reasons. Like I said, that could be taxes, not understanding taxes, not understanding fees, lack of time, making silly decisions, emotional reactions, buying, selling, all sorts of things. That's going to cost you a lot of money. Now, let's go to the fee calculator. So this is the cost of the fee. So now we get through these fees. We see a bunch of fees. We add them up. We realize that, wow, this is way more than I thought. I pay an advisor 1%, but on top of that, man, he has me in funds that are paying 1% expense ratio. And then on top of that, they have front-end load fees. I've seen this real time. This is not me making this up. I've seen this. One of my clients had 1% AUM fee being paid, 1 to 2% on all the funds that they owned. So the advisor picked a bunch of funds within the within their account at the investment product level. And all of this had a 1 to 2% alone. Oh, wait. On top of that, they had a front-end load fee, 5.75%. Now, you do the math on that. That's silly talk. How do you avoid that? Obviously, we talked about how to avoid that. You go search this. You pick funds that don't have these things. You pick ETFs and index funds. You follow the Budgetdog protocol. Now, let's go to this. Let's just assume we're investing $2,500 a month, which is $30,000 a year. And the same, let's just do a 10% expected historical return, but you're paying 1.5% in total. You might be like, oh, that's not too bad over 30 years. 1.5, I get 98.5. That's not how it works. Take a guess before I calculate it. If I calculate, your total investment balance would be $5.4 million. Sound good, right? However, you paid over $1 million in fees. You paid $1.4 million. You end with, let's say, $4 million on the dot, and you paid over a quarter of your fees, of your portfolio in fees. That's at 1.5%. There are a lot higher fees between everything all in that people are going to be paying. I can almost guarantee it. So let's say you go up to 2%, which is not uncommon. I'm sure a lot of people out there might say it is, but it's statistically proven that 2 to 5% is a pretty general range of fee structure. So let's go on the low end. 2%. You're paying 1/3 of your portfolio in fees. You're paying $1.8 million through your investments. But hey, they're giving you that free coffee, sitting you down, making you feel good, and you let somebody else manage your whole life, and you're not taking adult responsibility for your own financial future, go ahead, pay $1.8 million. That's what it costs you. I'm just stating facts. You can make the decision for yourself. You're a grown adult. I'm here to help if you need. Let's just say 3%. 44%. That sounds fun. Let's do 4%. 53%. I'm going to stop there because it gets ridiculous, obviously. If you want to do that, that's up to you. And with that being said, guys, when you look at the fees in general, we need to start to assess education. This is going to be key to changing your life once and for all. And I hope this helps you guys today. Leave a comment below if you have any questions. And if you guys want to look into Budgetdog Academy, go to the bottom in the show notes and you guys can apply to work with my team today. And I will talk to you all next week.